Less than 2 months ago, it looked like there was no way Donald Trump's trade war wasn't going to cause a global economic disaster. Stocks were crashing, and Bitcoin, whose price was already down substantially from its all-time high above 109K, fell below 75K in early April. Given the geopolitical situation, even the most devoted crypto believers would be forgiven for thinking that this was just the beginning. Instead, Bitcoin is now hovering at new records, even though the current 30% tariff on Chinese imports to the U.S. is not much lower than the initial 34%, which triggered the sell-off in the first place. Not to mention the still significant 10% on all other countries. If you think that Bitcoin's whipsaw recovery doesn't make any sense in the traditional way, we agree. It makes Elliott wave sense, though. This chart, shared with our pro subscribers on April 13th, shows that the structure of the preceding decline paved the way for the current surge to new records. There are three main types of Elliott wave corrections: zigzags, flats, and triangles. Oftentimes, however, the market would combine two or more of them to create a more complex corrective pattern. In the case of Bitcoin, the decline from over 109K to sub 75K looked like a triple zigzag, marked WXYXZ. Waves W, Y, and Z were all simple ABC zigzags, but the second X wave was a triangle, labeled ABCDE. There was no way to know in advance that this corrective structure would form. Once it was in place, however, the only way to go was up. The end of a correction means the resumption of the preceding trend. And since Bitcoin was clearly in an uptrend prior to its January 20th top, that uptrend was supposed to continue. Over the following 40 days, the price of the biggest crypto climbed from under 85K to almost 112K. In spite of all the chaos, Elliott wave analysis put us ahead of it. Now, should the new high be seen as another buy signal? We cannot reveal this here, but our pro subscribers already know our answer.